Welcome today to a little preview of the Banking Summit. Business Circle is foremost conference for senior bankers on the 24th and 25th of September. We're having a very exciting panel discussion, and as a preview, we have Steve Rogers here, a former executive from Google, and we'd like to ask you some of the transformative impact on financial markets from all of these technological advances. As a former Google executive, what do you think was the most surprising thing? Your specialty was user experience. About user experience, you can, maybe help us out with how can we learn from this in the banking world? What's the differences in geography that you saw, and ethnicity, perhaps?
Yeah. Okay, so it's an interesting question, and one of the things which is clear if you look specifically about geographies and you look specifically about user experience is that there are some really significant differences, and there are a lot of things which we perceive as differences, which actually, frankly, at the end, when you look deeply, aren't. Now, so for example, one of the things I was involved in quite a lot was privacy. So I've spent a few years as a core part of the Google privacy team, and we were running a whole bunch of research looking into the perceptions of privacy. Now, there's always this big perception that Europe is incredibly concerned about privacy. America isn't. Actually, it's not quite true. It's much, much more nuanced than that. So, for example, if you look at the US and you look at where people are concerned with privacy and where they're not, you take the bubbles of Silicon Valley or New York, where you have kind of the elites that are involved in technology. No, they're less concerned with privacy. And it's not because actually they're less concerned, it's because they understand, if you like, the trade they're making between privacy and service. You get outside of those bubbles, and actually it's a much more similar situation to Europe, where if you like, that trade hasn't been so evident for very many years. So the differences aren't huge. There are differences, especially if you go outside of the more typical Western world. So I also spent a lot of time in emerging markets. There you have some real specific differences, but there again, they're surprising. So we always expect, for example, if you go to what we refer to as an emerging economy, that they'll be in some ways behind technologically. So there again, something surprising. Actually, it's completely reverse. Because they leapfrog, because they are getting into technology now. They don't have the legacy, they don't have the baggage, they go straight onto the newer systems.
And the emerging markets you're referring to, which ones are they?
So for Google, that was, we looked at emerging markets as being emerging internet economies. So that would be, for example, somewhere like India or Thailand, Malaysia, Kenya, Brazil, somewhere where there is actually already a fairly well-established economy, but the internet economy is growing.
Right. Now, how could this translate into the financial markets, and where are the risks there?
So I think there's also some interesting things which happen as a result of those attitudes. So when I talked about America, I say, okay, there are some areas where there is an understanding of that bargain that's being made between privacy and technology. That actually goes over into a lot of different things within the US, and it's partly down to, if you like, even legislation, where in the US things are essentially permitted until they are
not permitted.
Until they're not permitted any longer, right?
Yeah.
So even you get things like that even in agriculture. So for example, in the US, you can try GM crops until somebody shows you that it's really a bad thing. In Europe, actually, it's the other way around. Things are not permitted until they're expressly allowed. Now,
guilty until charged.
Yeah. So what that then translates into finance quite well, because what it also shows is then that in the US there is let's say, a greater appetite generally for risk. So if we look, for example, if we look at the current state of economies of companies, especially smaller companies.
Yes.
In almost every case, the valuation of the company is going to be based almost exclusively on something intangible.
Right.
So intellectual property, brand, and so on. Right? in the US, there is the appetite to take risk based on that because you can see how it will project out into the future. In Europe, that appetite is much less so.
Yes,
it
that's
still
true.
exists, of course, but in Europe there's a much more concern about ensuring that there is something tangible to back up the investment that's made. If you're a small startup, you may have some fantastic ideas, but you probably don't have much tangible.
Yeah.
So I think as far as finance goes, especially the finance of new ventures, that makes a huge difference.
Yeah, and actually we've heard the comments that, you know, in the U.S. and in the U.K., there's a lot more private equity investment and private investors helping businesses develop. And that might explain my next question on challenger banks because, well, I think it's quite interesting that the UK has so many challenger banks and that here we struggle to, in Austria for certain, but also in other countries in our neighborhood, we don't give banking licenses easily, even when we have banks closing and giving up their banking licenses. So, and many people feel that the challenger banks aren't being original enough. So maybe you can comment on that a little bit?
Yeah. Interesting, you don't think they're being original enough. So one of the things that the challenger banks are doing is, or one of the things they're able to do, is move much, much more quickly, of course. Because they're purely in digital space, they don't have the baggage. And to be honest, it's like any industry which has been disrupted by some digital technologies.
Yes.
And I know that, so for example, at the moment you take something like Revolut, okay, that maybe they're not that profitable yet, but they're growing incredibly rapidly. And frankly, the number of customers that they have, the revenue that's going through, the amount of money they're handling, means that they will be on a path to significant profitability. And the huge difference is they have no or relatively no cost base.
Right.
It's I think honestly it's almost a done deal that the challenger banks will become the massive banks of the future unless the current banks can in some way transform. The thing is, that's really hard for them to do.
Yes.
So
I think only Alipay and also JP Morgan was able to do that.
Yeah.
But few of them have the willingness. It's not like they don't have the
That's
capital.
right.
It's the willingness, no?
So you have three things, right? So,
Yeah.
so yes, a big bank's got enough money to be able to invest, to be able to transform, of course. But there will be things that's stopping them.
Yeah.
So the first thing that will be stopping them
Right.
is the culture.
Right.
So they have to get to a mindset that what they have at the moment
Yes.
can be thrown out.
Right.
And when you've got an entire business which has been built on very successful products, to just throw those out seems completely wrong, seems ludicrous. You have, for example, you have transactions which net you significant income in a current bank.
Right.
And you look at a challenger bank, and because the challenger bank has worked out that they can do exactly the same transaction automatically, digitally, with effectively zero cost, they can do it for an incredibly low transaction fee.
Right.
Yeah, okay, that's a very, very difficult thing for a standard bank to give up in order to get to the same level as a challenger bank. And the thing is that what that triggers is so it's what I call corporate immunity. And it's visible in almost every industry.
Yes.
You will have something which comes in, and the company culture will form some kind of immune reaction to the change that's needed.
Yeah. Yeah.
And unfortunately, the big banks always get that thing triggered.
Yeah. Yeah.
And they'll say that it's going to take years and years and years to make the transformation necessary, which typically they just don't have.
And I think one of the interesting comments that we once heard last year at the conference was the resistance comes from having so many acquisitions that their systems were never actually transported. So now you have parallel systems running.
Yeah.
And of course, a Google customer would be very irritated if they knew their information was not accurate and they ended up in 5 different things. What were your observations on that? Yeah.
Yeah, absolutely. So immediately before I was at Google, I was trying to help British Telecom transform and change. Right? And so British Telecom brought in a whole bunch of digital natives to try and change the way the business worked.
Yeah.
And we sat there, and it was exactly the same situation. So many parallel systems running, and we were looking at all of these digital products. And the first thing you say is, okay, well, we need a single sign-on so that the user can come in and access everything immediately. So at the time, the IT department, if you like, of BT turned around and said, well, yeah, it's going to take us about 5 years. So you turn around and look at that and say, well, that's kind of not possible. So Google only has existed at that time for 8 years. How can it possibly take us 5 years to just go to a point you have single sign-on? And a single point of entry with access to every single product within a company is not an option.
Right.
It's not a nice to have. It's kind of it's table stakes.
Yeah. It's a customer expectation.
Yes,
yeah?
absolutely.
No, and we always used to say to people, well, you know, from the branding point of view, a customer thinks you are the same, regardless of what you don't want. They don't want the explanation that this is a different division. Yeah, very interesting.
So I have a very brief personal anecdote.
Oh, please, give us this personal anecdote.
So this summer I recently changed my home insurance from one policy to another, right? Within the same bank, because I'd taken out the insurance policy many years ago when I was a kind of standard banking customer, and by now I'm not. So I have the option to have this premier private service, and great. So they offered me this fantastic insurance. This will be a great thing to do. It has the same bank name letterhead, right? Of course. Yeah. It's part of the same company.
Yes.
They're not able to talk to the other bit of the insurance to find out what my premium was. They're not able to talk to it to find out what my renewal date was. And they're not able to talk to them to help transfer one policy to the other.
Incredible.
It's just ridiculous.
Yeah. And that shows you the kind of emotional pillars that they build, which is purely subjective and not objective.
What it's doing is essentially all they're doing is exposing the internal structure of the company to the user, and the user doesn't care.
That's right. And that's where the challenger bank, going back to your point, the challenger banks having grown like a plant this way. And what I also find very interesting in your comment was that they were growing very fast with their customer base, because we have seen some challenger banks try to grow. For example, there's one unnamed bank in Central and Eastern Europe, which ended up having to create branches to create, to be able to gain customers. And at one point, a non-digital bank said, well, they say they're digital, but we have less branches than they do. So because they had a problem getting the customers, they were so busy with the back office side of things. So your point is, you know, care about the customer. The other stuff will grow also organically. Yeah.
So that is an interesting one. I'd not heard of that. And that would scare me.
Embarrassing,
honestly.
Huh?
Yeah, that was... so... But it doesn't surprise me entirely, right? Because it's actually very difficult to remain focused on a true digital product. So a true digital product is one where you look at taking something incredibly complex and making it very simple for the end user. It's a product where you do something for an improbably low price. And why do you do it for an improbably low price? Because you have done it for almost zero cost. And then you do it at massive scale. So you don't try and do something where you are selling lots of lots in inverted commas, lots of products at a significant cost because you've negotiated, you've cared for it, you've made sure it's the perfect product. You take a product which is good enough, which does the job, which you can do for almost zero cost, and then you charge a very small amount for it. But you do that millions of times.
Yes.
That's how you do it. And the thing is that, so the story you're telling me, I'm going to make an assumption, and it might be wrong, that whilst growing that company, there was probably quite a number of executives in it who were not just from the challenger bank, not just
Yes,
from the digital
yes,
world,
yes,
but they were from the traditional world, and they understood there were traditional solutions to the problem that they could possibly employ.
Right, and they could
That's
sell
an
them
assumption.
just in a different mode, yeah?
Yes.
And that was still, it started during the time when retail and digital competed with each other rather than integrated. Now,
Yes.
there's an elephant in the room here that I'm going to bring up, which is about Brexit. You know, you're closest to this issue, having just flown in, and we've heard pluses and minuses, especially considering that London is, we talked about financing startups before and challenger banks, London is pretty much the center for fintech development in the world. And so, and it is sort of a castle in itself in having so much innovation. How will this be affected? Where do you see what's happening with Brexit that you can tell us a little bit about in terms of what's happening in the financial market?
Yeah, Brexit. Doesn't everyone love it? No.
Yes.
So there are some possible impacts from Brexit, and there is a lot of unknown impacts from Brexit. Mm-hmm. So firstly, let's look at the fact that the actual conditions of the exit are not yet negotiated, not yet known. Mm-hmm. Right? So what actually happens with Brexit in only 6 or 8 months isn't crystal clear yet.
Right.
Of course, partly because of the pandemic, meaning that the negotiations have not been simple, right?
Yes.
And not been the focus, frankly. But then let's look at whether this is simply a fintech thing. Mm-hmm. Well, it's not. Mm-hmm. It's because London isn't just the fintech hub. Mm-hmm. It is one of the key tech development hubs.
Yeah.
Right? And if I look at any of the tech teams that I've led, mm-hmm. Those that are obviously that are in the UK, mm-hmm. They're generally very multicultural, mm-hmm. and so I don't just talk about it being a team which is primarily European, mm-hmm. and there I'm going to include the UK in Europe for mm-hmm. a moment.
Yes.
Hopefully, but it's not a primarily European team. Typically, mm-hmm. it will be a team which is made up of multiple nationalities, including a lot of US citizens, mm-hmm. including a lot of citizens from the Middle East, Far East, mm-hmm. and so on. Mm-hmm. Yes, in recent times, a lot of tech teams have had a lot of Eastern Europeans mm-hmm. as well in London. Now, the thing is that those people aren't going away anytime soon. Right. There are more things that have made London an attractive centre for tech development than just it being part of Europe. Yes, yes. Because it works, because the entire world there works in English as a language, mm-hmm. helps. It's the same as the US, helps. Mm-hmm. And it is this true melting pot, which really helps. Mm-hmm. So I don't think it'll stop being a tech development hub in any way. Whether it stops being a fintech development hub, I can't see that happening. Yeah. Honestly, if it does happen, it will take a long time because it's really not. It's not a trivial thing mm-hmm. Mm-hmm. to establish a tech development center. Right. There's very few in the world, and so, for example, there's so many countries which have said we want to be the next Silicon Valley. Right. See how tough that is to do. Oh, too many countries have said that. Yeah. Yeah, and it's a really tough thing to do. Right. Same, you'll get people saying, okay, well, yeah, London's not so attractive now. We're going to be the next tech development hub. Mm-hmm. It's not a simple thing to do. Right. And that will sort of answer the question then, whether COVID, we know that we were discussing before how people are moving out of London. Yeah. And I do know also from the UK Trade and Investment that there are many fintechs and startups outside of London. It's in England rather than only in London. But when you say tech hub and the investment made, then it seems like it will stay stable there. And I know that Europe looks to London for this, yeah? Yeah, so... the pandemic's been interesting, hasn't it? Lockdowns. Yes. It's been I think a very telling experience for people who are sitting in an apartment in the middle of a city, which obviously you have in London, right? I'm lucky. I don't. I have a house out in the countryside. Yeah, also only 30 minutes from London, so it's actually not that big a deal. I think actually it's just a demographic thing. What the pandemic is doing is there is a demographic which moves out of London, right, which says, okay, it's probably now the time to move out of this, kind of slightly frantic life, and we're going to go and find a nice little cottage in the country, and we're going to raise our family and so on. It'll be a much better place for the kids. And by the way, if there happens to be another pandemic, then I've got a garden to walk in. Yeah. It will accelerate that. The other thing that accelerates it, I think, more is that companies have learned that it's possible to have employees not working in the office all the time, and they will still be productive.
Yes.
Okay. Google's done that for years.
Yeah.
Right? I mean, so in my time at Google, typically I was working with a team which was a globally distributed team. It would mean that part of my day was in the office in London because I had a team there. But part of my day was at home on a video conference, talking to a team in India, talking to a team in California, talking to a team in New York, because that was just part of the job. A lot of non-tech companies have learned now that that's possible. That's accelerated possibly the ability to move outside of London. It has an interesting impact, which is that real estate values are probably going to go down in London. They're probably going to go down in Berlin. They're probably going to go down in Vienna. They're going to go down in any city where we've suddenly realized that you don't actually have to be in an office the whole time. This won't be a short-term effect, but long-term, that actually then makes, for example, the centre of London, the centre of Berlin, a more attractive and possible place for a young software engineer to go and live and enjoy all the things that London has, because frankly the bars and the clubs and things aren't going to go away anytime soon. Yeah, there'll be some kind of a dip. That will all pick up again.
By that time, the young software developers are still growing, and then they'll be back in London. Yeah,
exactly.
Yeah, that'll be a very interesting thing, because we say there's always a swing back and forth, and maybe there are also satellite offices now. It's interesting you said this about the productivity, because the recently a CFO of a major bank said to me that 94% of his employees that were, they surveyed 100% of the employees, 94% said they'd rather work from home or have that flexibility in that option. Now, you also worked in the media world, which was, you've worked in two industries that went through real tectonic deregulation and shifts. The telecom industry is one of them, and the media industry was a shock they didn't want to accept. What can the banks learn from the media industry? What lessons?
Yeah, so the media industry, so for clarity, there's two businesses I worked in the media industry. So the BBC, where I was responsible for BBC.co.uk for a few years. And then for the last couple of years, I was working at Reach PLC, which is it's actually the biggest publisher of news in the UK. So the last thing that I did at the BBC before I left was run the first technical trials of the iPlayer. At that time, I was having a lot of discussions with the then controller of BBC One, Lorraine Hegarty, and we had discussions about how long the TV schedule was going to last. So, okay, I was a young digital native, and I sat there and said, look, Lorraine, TV schedule is dead, right? This whole story of inherited audiences, I'm afraid that's going to go away. Now, she came back at me at the time, absolutely spot on, absolutely astute, which was, look, Steve, I can't consider that at the moment, because my job deals with what happens for the next 2, 3, 4 weeks. In that period, the inherited audience and the schedule is still massively important. She was right. And then a number of years later, go into the news industry to Reach. And what I find there is that the shift has happened, right? And the problem was that the media industries at that time were really concerned with this big product they had in front of them, which was the cash cow, driving huge revenues, right? Banks are in the same situation. They have cash cow products driving huge revenues. The digital product, the digital world, was tiny, was small, was a side thing, right? And it didn't drive such huge revenues. Actually, it didn't drive that much in the way of revenues.
Yes.
But what the media industry didn't realize was that whilst it wasn't driving huge revenues in itself, it was continually cannibalizing the big revenues that it did have. Now, what the media industries needed to do was they needed to completely restructure for that new environment where the revenues weren't going to be as high, but the costs could be massively lower, and where the potential audience was much, much larger. So if I take Reach, so Reach PLC, okay, it's a company where traditionally it was selling newspapers, right? So shipping bits of paper all over the country with incredibly advanced logistics to make sure that something which was printed last thing in the evening could be on the shelves in the shops the next morning. Incredibly advanced logistics, huge, huge difficult task. Yeah, okay. And that drives a certain readership. Then you have digital, which is instant and global. And you can have a far higher number of people actually reading your product, if you like, reading your content. You've just got to then work out a business model, which means that you can still make money out of that, because in the digital world, people are not going to pay much. And in many cases, not going to pay anything. Right?
Because they're used to getting things for free. And that's where all this regulation, like
that was another thing the media industry actually did wrong, right? And finance industry hopefully can learn from this one in time, hopefully. Which was that the media industry, they first of all, they looked at it and said, okay, this is great, this digital thing. We can get new audiences. We can get more people to look at this stuff. It's great. And we've got it anyway. We've already written it. We've already filmed it. We've already recorded it. So we can let them have it for free, because they're already paying for it in the the right place, in the paper, or in on the buying the movie or whatever. So they're already paying for it. So it's great. So we can let them have this digital thing for free. Yeah. Okay. So then you fast forward a number of years, and people have grown used to the fact that the digital media, they can just get it for free. It's fine. Why do they have to pay for that other old thing? So suddenly those revenues start to really disappear rapidly, and you've trained your users to think that the service is free.
Yes, you've devalued it in a sense,
Exactly.
And that's an interesting question, because going back to the banking industry, at what point will the bank, will the customer devalue something from the bank? And also, I do think the digital natives are less loyal than their parents in terms of changing financial services. But also going back to some smart magazines, what they've done is they've made them very thin. They do a soundbite article and then refer to their online, to which there's a lot of advertisement attached, and they can guarantee their advertisers. So it's kind of an interesting phenomenon, this agility to be able. But it was a very tough lesson for many print, especially in the European world, where print ads really subsisted for a long time for jobs, which really supported many of the newspapers. Yeah,
absolutely. So the problem with newspapers, the thing that actually sustained newspapers for years and years and years, was classified ads.
Exactly.
The little ads in the back. Millions and millions and millions of them.
Which were replaced by other online portals.
eBay. Gone.
And eBay's little sisters that, are
yeah,
local.
little sisters,
Yeah.
and then these days, obviously, Facebook Marketplace as well,
Yeah.
and all those things.
Yeah, wonderful things.
And then, of course, real estate.
Right.
Yeah, suddenly, do you really go do you go and buy the specific paper?
Yeah.
Probably on a Wednesday that's got all the real estate ads now.
No.
You go and look at Rightmove.
And you want the video.
Yeah.
And
Yeah,
that's
you do.
only available online, yeah?
Yeah, exactly.
So we have set customer expectations differently, and I do think that the commodity nature of some of the banking products will force the banks to rethink. Now, do you see, I don't know if you, like Daniel, working in M&A at all, if you see any consolidation of the market coming up, and whether the players with the AI will be the most stable. Because one of the things about AI that I'm fascinated with is the ability to help predict trends, technological trends, where you can help your customers with the right investments and stabilize a little bit the financial markets.
Yeah. So I'm not directly involved in M&A, so I think it would be odd for me to comment on that, especially with this specific audience.
Okay.
But AI I can comment on. So it is clearly possible that with the intelligence that we can create in an AI system, that we can predict with increasing accuracy not just trends, but we can increasingly predict the outcomes of certain actions.
Mm-hmm.
The scale of the databases that we can create and that we can therefore learn from are so much in advance of the databases that would previously have been used. It would have been possible, of course, for a significant bank to take all the databases of all its clients and start to make some predictions on that.
Mm-hmm.
But it would be computationally incredibly heavy.
Mm-hmm. Mm-hmm.
With AI, you can start to use the logic to make connections that would otherwise not have been there.
Mm-hmm. Mm-hmm.
So I'll give us an example from the media world, which shows what you can do with AI. So there's a if you look at products or articles that we're going to recommend that someone would use, someone would read, for example, you could do that with a whole bunch of different things. You can do that by having a journalist sit there and saying, okay, I actually think the next thing that the person's going to want to read after X is quite definitely Y. Yeah. You could say in the finance market, well, somebody who's just taken out product X is probably now going to be interested in product Y. Okay. Typically, we would have a success rate with those things of 1% or so, 2%. So 2-3% is actually a very good rate.
Mm-hmm.
Okay. Digital is a world of incremental gains. So
Yes.
you look at it and you say, okay, if we can change something by 1%, it's pretty good.
Mm-hmm.
In banking, in finance, this is the same thing, right? If you look
Right.
at something, you say you can get an uptick in a specific use of a banking product of 1 or 2%, that's significant,
Yeah.
ultimately, to the bottom line.
Right.
Okay, so using AI, so we established a very, very good data science team, which could get to a point they could match behaviors from different people, match journeys from different people, and
Right.
start to predict and create theoretical journeys through content, right? On the fly, instantly, using artificial intelligence. And completely anonymously. So no privacy concerns. You don't have to say, this person has to sign in order to do this. This person, we have to build up a specific profile of this individual, which you would normally do also in finance. No, you can using artificial intelligence, you can create a hypothetical user which matches the behaviors that this user is demonstrating, and you can predict what they might want to do next.
Yeah.
With that, we got an increase in usage of 400%.
Oh my God.
Now, that's in a world of incremental gains. That's incredible.
Incredible. Yeah.
If you could imagine, if you could take that across to a banking product, right?
Yeah.
So I've got this banking product, and I've got about 2% of people using it. This is good. What if you could multiply that by 4? So suddenly we've got 8% of people expressing an interest in it. That's massive.
Yeah.
So yeah, AI can make a huge difference.
Wonderful. Where do you expect the technological advances now to go in the future? And this may be a loaded question because we're almost at the end of our interview. And I just want to throw in another thing that I was talking to someone yesterday, and he said operations, we're starting to look much more carefully now end to end so that we can see, going back to your user experience, what is actually happening that causes the costs to go up, you know?
Yeah.
So where do you see the technological advances, and will this enhance the user experience as much as the bank's profit?
So short answer,
Yeah.
yes, it should, right? The things that are happening in technology are happening more and more rapidly. We know that, right? So artificial intelligence is becoming, so first it's becoming a buzzword in some ways.
Right.
And true artificial intelligence, so general intelligence, isn't realistically likely to be here in a way which can be implemented within any specific product anytime really soon. But the use of artificial intelligence type products which are based on machine learning, which means that we can start to build really significant databases. And you know, obviously, that I'm part of a company called 42CX, where we look at building really significant databases.
Yes.
You can start to connect databases, right? Once you start to do that, you have huge volumes of information. And those will allow us not just to advance, if you like, the way that the product works, but it will enable us to transform the relationship we can have with the customer. And transforming the relationship we have with the customer also means that we can start to understand which points the customer is interested in, which points the customer wants to interact with us in.
Yeah.
Therefore, where we need to focus our actually probably decreasing investment. So, yeah, I think the technological advances are going to be in increasingly in understanding what a user journey is, in understanding, therefore, where the investment is best placed in order that the end-to-end journey, as you said, becomes apparently much better and more tailored to a specific user, but actually probably lower cost because you're not trying to do all the other things.
Right. You're doing what you do best, in a sense.
Doing what you do best, doing what the customer actually needs.
Yeah. Excellent. Excellent. Well, I think we're at the end of our interview. I would encourage all of you at home to come, or in the office to come and see Steve live in person with Daniel Matas from 42CX and a few other very, very significant people at the banking conference on September 24th and 25th. And thank you for joining us. Thank you for Business Circle and the Broadcasten, who has partnered with us to have this video made. Thanks.
Thank you.